So in this section, we're going to be looking at chart patterns. Chart patterns are a subsection of technical analysis. And basically, chart patterns are patterns that you see on charts that have historically shown that if these patterns show up, there is more likelihood that the price of this financial product would move in a particular fashion. So either this pattern, once it breaks or once it forms, there's more likelihood that prices will move in a certain type of way. So chart patterns are used because they are believed to have predictive value on future price movements. And traders are going to be using these chart patterns to choose an entry and exit points while they are trading. So they really help you systematize your way of trading. If you want to buy something, well, you could look at chart patterns and figure out where exactly to get in, where exactly to get out, and reproduce that type of trading through looking at similar patterns and reproducing those trades. This being said, why do chart patterns work, and do they work? Now, there's a bunch of chart patterns out there. You can see lists of dozens and dozens, I want to say hundreds of patterns, some not widely known. So are you going to learn all these patterns? What patterns are good? What patterns are not good? The thing is this, a lot of these patterns, if everybody believes a pattern is going to work, it might be a self-fulfilling prophecy, right? So if I tell you, if you see, a rabbit, then the price is going to go up. Well, what if everybody looks at that and everybody believes it? And obviously you can't have a rabbit on a chart, but let's say if you see a triangle, well, prices are going to go up. Well, what's going to happen? If a triangle forms at one point, for a reason or not, then if all the traders know about that and everybody believes it, then all the sellers now believing that the price will go up are going to cancel their orders. And all the buyers who believe that it's going to go up might buy at more aggressive prices. And thus the price will go up because we believe that this pattern would cause the price to go up. So it's a self-fulfilling prophecy. Now, it's not because some people know about these chart patterns that they will work. Some other patterns make sense. So some patterns, they actually make supply and demand sense. So when you think about them, it makes sense that if you see that chart pattern, prices will behave in that particular way. So the patterns that I like to look at are patterns who have reason behind them. Because all patterns have this, self-fulfilling prophecy type of mentality behind them, where you could say, well, everybody sees them, so that's why I'm going to use them because everybody knows them. But then you're not putting all the odds in your favor. If you want all the odds in your favor, just choose the patterns that have more meaning to them. Not just because everybody knows them, but because there is more meaning to them. Everybody knows them as well, but there's meaning to them as well. So the patterns that I'm going to show are the ones that I think are the most valuable. Some of them I'm not going to show. And if you have a recommendation for one that you think is valuable, put it down in the Q&A section, and I might add it if I believe it's of value. But for the time being, I'm really going to put the ones that I think are the most beneficial. So you don't just have a list of a bunch of patterns that aren't going to add value to your trading. So the first pattern we want to look at is the double top, double bottom, or multiple tops, multiple bottoms. So it's, I guess, 4 different types of patterns here. Now, these patterns work across financial industries. So you can be trading currencies, you can be trading cryptocurrencies, you can be trading stocks, futures, whatever you want. These patterns make sense in any type of product, okay? Now, let's say the double bottom. The double bottom is basically when you have a financial product and it touches a low point, goes back up, and touches this low point again. We call this double bottom. So it hit this bottom twice. What that tells me is that if we get back to this level, there's going to be a lot of support, because everybody sees that this is a key support level. There's a lot of demand at that level. And if prices go down there, what's going to happen is the prices are going to bounce off of that level and go back up. So if you are a trader and you're looking to get into a long position and you want to go long this product, well, a good place to put your buy order would be just above this support level. So if the prices fall, you are likely to just get filled, and then prices going up where you start making money because there's a lot of support here and there's a lot of other buyers at that level. And this is what we call a double bottom. Now, you can have a triple bottom, which is when the prices tests that level more than 2 times. So that would be a triple bottom. And this is why we call it multiple. There's multiple, because it can, test it 4, 5, 6, 7 times. And the more times it tests that level and bounces off of it, the more robust this level will be, because more people will see it. It will have a stronger impact and it'll be a stronger level. So that being said, this is what, a double bottom or a multiple bottom would be. If I have another chart here, if you look at this here, we have a multiple bottom. So it touches a level here, comes back to it, goes back up, comes back to it. So again, if you would have just seen this double bottom, then you might have been able to buy here and make profit on this move. But now there's a triple bottom or multiple bottom. And now if the prices go down again, you can rest assured that there's going to be a lot of support at this level, and you might want to put a buy order just above it in the case that you want to buy this product, right? So this can be used to, give you an indication of where there's going to be a lot of demand. Now, if you want to look at the tops, it's just the inverse, right? So if prices are going up and they touch a level here, goes back down, touch the level again, well, here we have a double top because it touched this level 2 times. So you would be thinking that if it gets back to this level, we're going to bounce off of it and go down. And, this is what happened here. And now we have a multiple top because it touched it more than 2 times. So we have several times that it touched this level. So there's a resistance at that level, a lot of sellers, because a lot of people think that this is too high of a price. Now, when you're looking at the Forex market, you can try and understand, well, and actually let's open a Forex chart right here and it'll make more sense. Let's say I'm looking here at, let's see here. Well, we could say here that there's a double bottom here. And if it goes back down to this level, we might want to buy. We could say here, well, let's see. Well, here we had a triple bottom here. So let's draw a line here. So initially, if you're trading this currency, you would be like, okay, well, you know what? I have a double bottom. We hit it here. We hit it here. Then if we're coming back to this level, you might want to put a buy order here if you're looking to buy this currency. So why? Because you know that there's a lot of support at this level, and here it bounced off of it. And look at this. Now, even if you missed these, there's a triple bottom here. So multiple bottom. If you extend this line, you'd see that it bounced off of it again. And let me just put this. It bounced off of it again. So you could have, if you wanted to be long this position, you wouldn't buy it just here or buy it here. You would wait to buy just above a certain support level. And you would have been able to buy here and make profit on this move. You might have probably, if I was trading this, I see that there's a bit of resistance here as well. I might have been able to buy somewhere like here, let's say, I would be able to buy somewhere here because I know that this is a support level. And then as soon as it touches the higher resistance level, I would have sold and made this amount of profit, right? Now, you can fall into the practice of thinking, well, why is there a support here? Why is it bouncing off this level? Why is it not bouncing off of that level? And try and understand it. Because you could argue, or you can try and say, okay, well, for these currencies, if the currency falls above, let's say if I put USD CAD, if the currency goes to $1.50, you know what? Then the Canadian dollar is very cheap versus the US dollar. And then there's a lot of exports that are happening from Canada to the US because now the Canadian dollar is very cheap. And because of that, there's a lot of currencies exchanged to be able to buy these products, and that causes the demand to fluctuate from here and there. But this is fundamental analysis. This is not technical. And if you're a true technical analyst, what you're saying is prices will reflect this fundamental information. So you don't need to do it. It's already in the price. If prices are bouncing off these levels, you don't need to understand what exactly is the reason. Is the reason because companies are selling at this level? Is it because traders are selling at this level? Is it the government that doesn't want the currency to go over that level and trying to manipulate the currency? You're just seeing that this is what is, and you are going to profit from that because you are seeing it through the chart. Now, we will look at fundamental analysis in a way, but just to let you know that when you are a true technical analyst, and which I don't suggest that you just do technical analysis, you should do everything. But the mindset is that this other information is reflected in the price. So when you are looking at prices, it's not necessarily that important to see, well, what exactly caused it at that price to revert, just that it is more likely that it reverts when it touches that price. And this is, what, bottoms and tops and resistance levels can help you do. It can help you figure out an entry point, an exit point, so you can get in, get out, and move on to the next trade. So this does it for multiple tops, multiple bottoms, double tops, double bottoms. And I'll see you guys in the next lecture.